Welcome to our To Plan B or Not to Plan B? That is the question presentation, and our survey results of 150 technology company CEOs in the UK and Europe. Before we get to the survey results, we just want to define what is Plan B and why does it matter. Plan B is a plan that helps a company adjust and adapt to a crisis, even succeed in a crisis. Plan B matters because Plan A can fail, usually in an unexpected crisis, such as a financial markets crisis, which is beyond a company's control. Plan B matters because every CEO wants a predictable business and wants to be prepared, needs to be prepared. For example, in the 2008 to 2009 crisis, valuations of most technology companies fell by 40 to 50% in only a few months, and companies that weren't prepared with a Plan B suffered pretty badly. They couldn't adapt and couldn't predict what was going to happen. It's been 8 years now since the last crisis, and another one is coming. We've had QE and negative interest rates, and it's easy to be lulled into thinking that this is all okay. But it's not okay. And this time the crisis could be longer and deeper, and cause a lot more pain than the last one. And that's what this survey and research is all about. Now, before we move on, just to clarify, if you're the CEO or leader of a private company, do you care if your company's valuation declines by 40 or 50%? If you're private, does it really matter? Yes, absolutely it does matter, because it affects your ability to recruit and retain management talent, at least via share options, and it affects your ability to raise capital, to do share deals, and to achieve an exit. And yes, it affects your mood, which matters. Given the growing uncertainty in the markets, we recently asked 150 technology company CEOs in the UK and Europe how they felt about the markets, and specifically, do they believe market uncertainty will negatively affect their company's revenue in the next 12 months? And do they have a Plan B in place to act on as soon as they see the next market crisis or crash severely affecting their business? The results were interesting. Less than a third of the CEOs are concerned that market uncertainty would negatively affect their revenue in the next 12 months. As a whole, European technology company CEOs do not appear very concerned about market uncertainty. Even in the UK with Brexit, 60% of CEOs in the UK are unconcerned about market uncertainty. In Spain, this number rises to 80% being unconcerned, and 95% of CEOs in the Netherlands are not concerned about market uncertainty. On the second question about having a Plan B, 40% of CEOs admitted to not having a Plan B in place to act on when the next market crisis or crash arrives. Even in the UK with Brexit, 43% of CEOs in the UK admit to not having a Plan B in place. This number rises to 50% in Spain. In the Netherlands, 74% of CEOs say they have a Plan B in place to act on in a market crisis. Several CEOs offered their comments to us regarding the market environment and having a Plan B. Now, these comments are mainly self-explanatory and show that many of the CEOs are just not that concerned about having a Plan B, or believe that they are already inherently protected by having offices around the world or being able to just scale back. Not relevant for my company or my line of business was a common theme.